Everyone tried to stop Tesla. Nobody could. Imagine building a company while 5 different forces, each powerful enough to destroy you, are all trying to shut you down at the same time. Car dealers tried to make it illegal to buy a Tesla. Wall Street investors bet billions of dollars that Tesla would collapse. Every major car company on Earth said electric vehicles were a dead end. The United States government sued Tesla's CEO, and multiple countries tried to block Tesla from operating on their roads. Tesla survived every single one of them, and today it is worth more than Toyota, Ford, General Motors, BMW, Mercedes-Benz, and Volkswagen combined. This is the story of every battle Tesla fought, how they won each one, and what it teaches you about money, investing, and never betting against someone who refuses to quit. Enemy 1. The car dealer lobby. For over 100 years, every car company in America has sold its vehicles through independent dealerships. The customer goes to the dealer sells the car. The car company never meets the customer directly. Tesla refused to follow this model. Elon Musk believed dealerships created a bad customer experience and added unnecessary costs. So Tesla decided to sell directly to customers through its own stores and website, cut out the middleman completely. The car dealer lobby did not take this quietly. They went to state governments across America and lobbied to make it literally illegal for Tesla to sell cars directly to consumers, and they succeeded in several states. In Texas, one of the biggest car markets in America, Tesla was banned from selling or even discussing pricing at its showrooms. Customers had to order online from another state. Think about that. You could walk into a Tesla showroom in Texas, but the staff were legally forbidden from telling you how much the car cost. Tesla fought back through the courts, through public pressure, and through sheer persistence. State by state, the bans began to fall. By 2023, Texas finally allowed Tesla to sell directly. It took over a decade of legal battles, but Tesla never stopped selling, never stopped growing. The dealers who tried to ban them, many of them are now struggling to sell their own electric vehicles. Enemy 2. The short sellers. Wall Street. And this battle cost short sellers more money than almost any short position in stock market history. To understand this battle, you need to understand what short selling is. When investors short a stock, they are essentially betting that the company will fail. They borrow shares, sell them, and hope to buy them back cheaper after the price falls. If the stock goes up instead, they lose money, sometimes a lot of money. For years, Tesla was the most shorted stock on the entire U.S. stock market. At its peak, investors had bet over $20 billion that Tesla would collapse. $20 billion against one company. The financial world was so certain Tesla would fail, they put $20 billion on it. The reasons seemed logical at the time. Tesla was missing production targets, burning through cash at an alarming rate. Elon Musk was tweeting erratically. Analysts called Tesla overvalued, unviable, and a fraud. One prominent short seller called it the biggest fraud in corporate history. Then Tesla started delivering cars. Then it became profitable. Then the stock price exploded. Between 2019 and 2021, Tesla's stock rose by over 1,500%. Short sellers lost an estimated $50 billion. It was the largest short squeeze in stock market history at the time. The people who bet billions that Tesla would die instead funded one of the greatest wealth transfers in stock market history. Every short seller who lost money transferred it directly to Tesla investors who believed. Enemy 3. The traditional car giants. The most powerful car companies on Earth, companies with 100-year legacies, millions of employees, and billions in resources. They looked at Tesla and laughed. In 2008, the same year Tesla was nearly bankrupt, General Motors killed its own electric vehicle program. The GM EV1 had been a promising electric car. GM recalled every single one and crushed them. Literally crushed them. The message from the industry was clear. Electric vehicles have no future. Toyota's chairman said in 2021 that a full transition to electric vehicles would be difficult. Volkswagen's former CEO said Tesla would not be able to maintain its position. Ford's executives privately called Tesla a science experiment. By 2023, every single one of those companies was scrambling to build electric vehicles. Ford announced an $18 billion investment in EV production. Volkswagen committed to ending combustion engine sales in Europe by 2035. General Motors pledged to go fully electric by 2035. The industry that laughed at Tesla was now rebuilding itself in Tesla's image. Tesla did not just survive the car giants, it forced them to become Tesla. Enemy 4. The SEC. The United States Securities and Exchange Commission, the most powerful financial regulator in the world. And this battle got deeply personal. On August 7, 2018, Elon Musk tweeted something that changed everything. He wrote, "I'm considering taking Tesla private at $420. Funding secured." 12 words. Those 12 words triggered a federal investigation that nearly removed Elon Musk from his own company. The SEC alleged the tweet was misleading because the funding was not actually secured in the way the tweet implied. They sued Elon Musk personally. They demanded he be removed as Tesla's CEO. The man who built Tesla, potentially being forced out of his own company by the government. Elon Musk reached a settlement with the SEC in 2018. He paid a $20 million fine personally. Tesla paid another $20 million. He stepped down as chairman, but crucially, he remained as CEO. Tesla's board agreed to have lawyers pre-approve certain of his tweets. The SEC wanted to remove the man who made Tesla what it is. They settled for a fine and a promise to be more careful on Twitter. Tesla's stock today is worth more than it was the day that tweet was posted. The money lessons. Now here is what all of this means for your money. Because the Tesla story is not just entertainment, it is one of the most important investing case studies of the last 20 years. Money lesson 1. Disruption is always fought before it is accepted. Every technology that changed the world, from electricity to the internet to smartphones, was resisted, dismissed, and attacked before it became inevitable. Tesla's battles were not unique. They were predictable. And that predictability is what makes disruptive companies valuable to invest in early, before the world accepts what is coming. Money lesson 2. The crowd is often wrong about disruptive companies. $20 billion was bet against Tesla. The people who made those bets were not stupid. They were experienced, well-resourced investors with access to the best information available. And they were catastrophically wrong. The lesson? Do not mistake confidence for correctness, especially when the crowd is betting against something genuinely new. Money lesson 3. The strength of a company is tested by its enemies, not its friends. Tesla became worth over $800 billion not despite the attacks, but partly because of them. Every battle Tesla won made it stronger, leaner, and more trusted by the people who believed in it. When you are evaluating any company to invest in, look at who is trying to stop it. If powerful incumbents are threatened, that is often a sign the company is doing something genuinely important. Car dealers tried to ban Tesla. Wall Street bet $50 billion it would collapse. The car industry called electric vehicles a dead end. The government tried to remove its CEO. Every single one of them failed. Because when a company is genuinely changing the world eventually has no choice but to accept it. On this channel, every week, we go deep inside the stories of the world's most powerful companies and pull out the money lessons and investing principles that most people never get taught. If you are serious about understanding how money and business really work, subscribe now. It is free, and the knowledge you get here could be worth far more than that. Comment below, which enemy do you think came closest to actually stopping Tesla? And which company should we cover next?